What are 3 of the best stocks to buy right now? In this video, I'm going to go over 3 stocks that I'm considering buying in my public account, available for anybody to see at their current valuations. If you'd like to see this account, stick around to the end of the video. We're going to go over how we're doing and what our plan is for the future with this account. So for anyone new, welcome to the Physics of Investing. On this channel, I talk about investing in individual stocks, as well as how you can maximize your risk to reward in the market, building long-term wealth, and beating mutual funds and index averages. So after we go over the 3 stocks that I'm going to talk about, we're going to review the Investing Together account. This account includes a portfolio that I built from scratch, documenting every single move on YouTube. I post updates on this portfolio weekly, so if you'd like to track how the account does and learn more about the stock market, please leave this video a like and subscribe to the channel. It really helps me out a lot. So now let's get into the 3 stocks that I think are some of the best stocks to buy right now. So stock number 1 is MasterCard, ticker symbol MA. Quickly going over their business model, we can see MasterCard is a technology company in the global payments industry that connects consumers, financial institutions, merchants, governments, digital partners, businesses, and other organizations worldwide, enabling them to use electronic forms of payments instead of cash and checks. Okay, guys, big thing right here. MasterCard is a technology company, right? So I know a lot of us, when we think about companies like MasterCard and Visa, we don't think technology, we think like credit cards and banks, but these are technology companies. I think that's important to understand. So let's keep moving. Through our unique and proprietary global payments network, which we refer to as our core network, we switch, authorize, clear, and settle payment transactions and deliver related products and services. We have additional payment capabilities that include automated clearinghouse, ACH, transactions, both batch and real-time account-based payments. Okay, so now we know even more about how MasterCard makes money, right? MasterCard operates a proprietary global payments network, right? So MasterCard uses this global payments network to switch or authorize, clear, and settle payment transactions, right? So MasterCard clearly points out the few things that they do not do, stating, we do not issue cards, extend credit, determine or receive revenue from interest rates or other fees charged to account holders by issuers, or establish the rates charged by acquirers in connection with merchants' acceptance of our products. In most cases, account holder relationship belongs to and are managed by our financial institution customers. So big thing here. MasterCard doesn't make money from issuing cards, okay, extending credit, or from interest rates and other fees charged to account holders, right? So the only thing MasterCard makes money from, right, is charging its customers, who are financial institutions, merchants, governments, and so on, to use its global payment network, okay? So what affects how much money MasterCard makes? Like, what affects how many institutions are using their global payments network and how much they're paying? Okay, so they state it right here on the same page, writing, we generate revenues from assessing our customers based on the gross dollar volume, GDV, of activity on the products that carry our brands, from the fees we charge to our customers for providing transaction switching, and from other payment-related products and services. So basically, the more people using MasterCard credit card branded credit cards, that means the more money MasterCard is making, right? Because that means there's more people using the MasterCard payment network. So that's really key into understanding this. So now that we know essentially how the company makes money, let's check out some of their financials. Looking at that revenue growth, it's just so juicy. If you didn't get that reference, don't worry about it. I thought it was really funny. So in their most recent year, MasterCard grew revenue by 13% year over year and net income by 39% year over year. This is really great growth, especially a company near like a $300 billion market cap. A net income growth of 39% is super impressive. So looking at their balance sheet, I'd like to direct your eyes to the line items highlighted. So MasterCard has a massive $10 billion in cash, which can almost entirely cover all their long-term debt of $12 billion. So just looking at those 2 very important line items, we can see MasterCard is in a great financial position right now. So let's also look at their valuation. They got a good balance sheet. They got good net income and revenue growth. What is their valuation? So as for their PEG ratio, which is So MasterCard's trading at a forward PE of 33.67 and a PEG ratio of 1.67. The forward PE is relatively in line with what they normally trade on. And as for the PEG ratio, which is basically a PE ratio that accounts for growth, it's among the lowest it's ever been recently. And the PEG ratio, like I said, it accounts for growth and it's a PE ratio, so the lower the better for that. Okay, so as for the stock price, taking a look, we can see it kind of looks like it just fell off a cliff. You know why? Because of this. MasterCard shares slump over 6% as Q3 earnings miss estimates. So as we all know, investors hate when companies miss estimates, right? But looking at their revenue and net income growth, we know what the long-term trend is. It's just up. They're doing better and better every year. So if they miss estimates a couple quarters, that doesn't bother me as a long-term investor. But if I can get the company for cheaper than what it normally trades at, I'm going to jump on that and I'll just keep averaging down as it falls. So for the long term, I'm really looking at this company right now. I can really take it seriously. I'd like to add it possibly to the investing together account. We'll see if the stock keeps falling by the time we have more cash. We're just going to keep our eye on it for now. So stock number 2 of 3 is CHG, ticker symbol CHGG. CHG, according to their 10K annual report, is a smarter way to student. As the leading direct-to-student learning platform, we strive to improve educational outcomes by putting the student first in all of our decisions. Very important right there. We support students on their journey from high school to college and into their career with tools designed to help them pass their tests, pass their class, and save money on required materials. Our services are available online, anytime and anywhere, so we can reach students when they need us most. So if you've ever used CHG, CHG is basically an online learning hub of all these tools that a student can use to better themselves for basically any subject. It's available anytime, right away. I personally use some of their services. I use CHG Study. I'm a STEM major. It's very key having all those. So CHG Study is essentially I'm going to get into that in the next section, but CHG Study is essentially a combination of all these solutions from all these different textbooks with step-by-step solutions solved out for you. And everything basically how to do the problem, how it works is laid out for you. And they have a collection of thousands of these questions all answered from commonly used textbooks, which is super key to attracting people to subscribing to their services. So moving forward, students subscribe to our subscription services, which we collectively refer to as CHG services. Our primary CHG services include CHG Study, which I just talked about, CHG Writing, CHG Tutors, CHG Math Solver, and Thinkful. Our CHG Study subscription service provides expert answers and step-by-step textbook solutions, helping students for their coursework. When students need help creating citations for the papers, they can use one of our CHG writing properties, including EasyBib, Citation Machine, BibMe, and Cite This For Me. When students need additional help on a subject, they can reach a live tutor anytime, anywhere through CHG Tutors. Our CHG Math Solver subscription service helps students understand math by providing a step-by-step math solver and calculator. In October 19, we completed our acquisition of Thinkful Inc., Thinkful, a skills-based learning platform that offers professional courses directly to students across the United States to expand our offerings. In 2019, over 3.9 million students subscribed to our CHG services, an increase of 29% year over year from 3.1 in 2018. All right, so that's a lot to take in, so let's kind of diagnose some of this. The main thing you need to know is CHG competes in tutoring for everyone in any subject, anytime and anywhere, right? So I use their services and I think they have a phenomenal product. Like, I love it. I think you can't use it. I think you can't be a STEM major without using CHG. So looking at their financials, we can see CHG has increasing revenue and decreasing net loss, which is really what you want to see from a company that isn't profitable yet. A lot of people invest in unprofitable companies, but they don't see any path to profitability. In my eyes, a path to profitability would be either decreasing net losses, or if they have increasing revenue and increasing net losses, their increasing revenue outpaces their increasing net losses. That would be considered a path to profitability. If there is no path, then you're kind of just, you're speculating, you're gambling at that point. All right. So in their most recent year, CHG revenue grew by 28% and their net loss shrunk by 35%, which is really good. We like to see that. Looking at CHG's balance sheet, CHG has an absolute fortress of financial safety, with cash and short-term investments alone amounting to $1.25 billion, which is pretty darn close to covering their total liabilities of $1.7 billion. Looking at CHG's valuation, we will see that Chegg has a forward PE of 44.44 and a PG ratio of 1.48. So Chegg's trading at a premium. A 44 PE is relatively high, but in Chegg's most recent last 2 quarters, they grew revenue at 60%, which is really phenomenal growth. So I'm willing to pay that premium. I see a lot of long-term growth in the future, and I'm not exactly worried about the short-term valuation. So even with phenomenal growth, Chegg stock price still looks very cheap. It has been unjustly downtrending recently, and I think that's just an opportunity to kind of jump on the Chegg train and get some shares in. So with everything that's been going on, I think online learning has become normalized, right? Everybody's had to stay at home and kind of adjust to this very rapidly and very quickly and in a mass format. And I think what this is going to do, I think it's going to make online learning kind of the new norm. Not for everybody, obviously, but now that teachers and students have been exposed to it, I really think what this is going to do is going to open up more options for when we do go back to having everything normal. People are going to be like, okay, I've done online learning. I know what it's like. I can do it. Like, it's not that bad, which is really, really important for Chegg in the long run. So I don't think Chegg's going to suffer when school's opening again. I think they're actually going to benefit because all the recognition they received and all the publicity they got when schools were closed. All right, so the last stock, number 3 of 3, is Facebook, ticker symbol FB. Honestly, I feel like I keep just repeating myself with this stock. So if you haven't watched any of my other videos, I'm just going to quickly review Facebook. So Facebook builds, this is from their 10K, useful and engaging products that enable people to connect and share with friends and family through mobile devices, personal computers, virtual reality headsets, and in-home devices. We also help people discover and learn about what is going on in the world around them, enable people to share their opinions, ideas, photos, and videos, and other activities with audiences ranging from their closest family members and friends to the public at large, and stay connected everywhere by accessing our products including Facebook, Instagram, Messenger, WhatsApp, and Oculus. So really at its core, Facebook is just a digital advertising beast. They have a lot of information about all their users so they can kind of know what to cater to certain individuals, and companies of small, medium, and large size are willing to pay for that because they know that it's going to benefit their revenue in the long term. So everyone wants to advertise on Facebook and Instagram, and that's because a lot of people spend a ton of their time on these platforms, more than TV like probably ever did, right? So social media is everywhere. People spend a lot of time there, and Facebook, and if we look at Facebook numbers, we can see this. Facebook has some massive net income and revenue growth over the past several years. Facebook also has a very solid balance sheet of nearly $12 billion in cash. And when you compare their total assets to total liabilities, honestly, it's just kind of a joke. Facebook has like 5x total assets versus liabilities. Honestly, disregarding all that, all you really need to do is look at the valuation of this stock and know it's a buy. Right? Facebook has a forward PE of under 25 and a PG ratio of under 1. This stock is stupid cheap right now. Like, it's going to be so hard to lose money over the next 5 years. It's going to be so hard. I'd say it's going to be it's even very hard to not beat the market average with this stock in your portfolio for the next 5 years. That's just my opinion. All right, so those are the 3 stocks we went over. Some closing remarks, just wrapping everything up. We're going to go over the investing together account really quickly and kind of what our plan is for the future. So as of this morning, November 4th, Facebook just made a massive move upwards and we're up about $40 in this account. Honestly, this is nothing, right? I expect so much more growth for this account. I think we're going to do very well. This is just a minuscule gain, and I'm going to continue holding. I think in the long term, we'll definitely be able to double up our position in Facebook over the next 5 years in terms of gain. I think we got tons of growth, and I'm really excited to keep growing this account. So in the future, I'm really interested in adding a company like MasterCard. I think this company would be a phenomenal pillar stock. So Facebook's our pillar number 1. Nordstrom's kind of like a speculative value play, but we need another pillar stock. And I think MasterCard would do a great job of being that second pillar stock. But right now we only have $80 in cash, and we're a few weeks away from getting another $250. So hopefully MasterCard continues to fall. And then what we can do is we can just scoop that up and start building that position. And that way we'll have Facebook and MasterCard as our 2 large positions. Both companies are very big, very profitable, and very dominant in what they do, which I think is really important when you're considering building a portfolio, initially at least. So as for today's video, that's it. If you guys got any value out of this video, please leave a like and subscribe to the channel. I'd love to hit 50 subscribers, and I'm only a couple away. So hitting that subscribe button would do me a massive favor. I'll be halfway to my goal of 100 subscribers. So please hit that subscribe button. I'm gonna say it one more last time. Sorry, and if you like the video, please drop a like. And everybody have a great day.